Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explaining what drives mortgage rates on a daily basis. Sometimes it could come from something like the economic calendar or headline news or geopolitical. Sometimes it could be a combination of those. However, we also find sometimes the market sentiment changes where good news is now bad news and or vice versa. So we kind of try to give an explanation on any given day as to what is the impacting and why it's doing what it's doing, and hopefully give you a little insight as to uh, where the rates are going. And hopefully this will help you if you're looking to refinance or buy, help provide you and give you that informed decision to make a decision as to moving forward or holding off or what you want to do going forward. A little bit about myself is I am a loan officer. I do work with the national lender, so we are doing loans in all 50 states. So if you guys got questions about anything, we are here as a resource as well. We'd love to help you out with your mortgage needs, but we'd like to be a resource as well. So if you guys got questions, please feel free to ask. Meanwhile, we'll just jump right into the report here today. We'll start off with the economic calendar, which has nothing to report today, actually. This week will be rather light. The big report this week will be actually Thursday. We got the CPI report, which will be inflation data, and then we also got the weekly jobless claims on Thursday as well. So that will be the main thing we'll be looking for this week. So otherwise, the economic calendar is rather light going forward. We do have headline news going on. We are the 12th day of the Ukraine and Russia war. Stocks are down as a result, so a lot of them are taking pretty big hits today as they continue to go lower. A lot of the money is going into today gold versus mortgage-backed security or bonds. We're not seeing, so there's a flight to safety, but it's more going more into gold because right now there's talk about stagflation. So that is obviously a big concern to people. That would be our worst case scenario. But mortgage-backed securities today, we are down right now about 16 basis points from where we left off on Friday. And this is where we left off on Friday, and we are right here. We did start off the day below the 25-day moving average, did work our way back up. So again, pricing is a little bit worse there, so rates are not as good, but again, it's not that far off. You're talking 60 basis points. That could be roughly about an eighth of a percent of the rate, maybe, on that. So as you can see here, the volatility, we've been seeing a lot of fluctuations going up and down, up and down. So this is where we are currently. And let's go ahead and take a look at yields. We'll kind of go through quick and make this kind of quick and sweet, but we're down to 1.74. As you see, we did touch off, had some fluctuations here in the 10-year yields. We're kind of back to close to where we were yesterday at about 1.74, even closely touching this technical level right now and moving below the 100-day moving average. No, I'm sorry, 50-day moving average here rather on there. So again, not a lot going on. A lot of the same old going on today. Concerns obviously with the Russia-Ukraine wars. There was talk about banning Russian energy between the U.S. and its allies. So obviously the most impacted in that category would be our allies in Europe, as they account for a pretty big portion. I think they usually take in about 45% of their energy needs are coming in from Russia. So that is a pretty big chunk of change. Us, it's kind of like it's pretty low in the U.S. here, so we don't have as much. It wouldn't impact us as much, but to them it would. Um, but again, price of barrel, I understand, touched off of $130 now, so that's a concern, especially for those who are trying to, absorb some of these additional costs, especially trying to get to work and stuff. The higher gas prices, a lot of things are just simply going up. Our cost of goods as they have to be transported, and of course, those transportation costs have to be absorbed into the cost of the food as well, and other items as well. So, lastly, we'll take a look at what's the average rate for conforming loan limits. The 30-year fix is now at 4.05, so it did dip slightly, and 15 years at 3.37 right now. So there's a slight low. They did dip slightly lower, but these are again for conforming limit, and they do have points put into them. So these do have some points factored in. All right, folks. We'll end it here as it's pretty much the same old, same old. We don't want to bore you guys. But if you guys got questions, please reach out. We are here to answer and help you guys out. We'd love to be able, again, if you want to talk about your refinance or purchase needs, we'd love to be able to talk to you about those. Please reach out on that as well. Meanwhile, we look forward to see you guys in tomorrow's video. If you like these videos, please help us out and smash that like button and subscribe and share us. We greatly appreciate that. Have a great rest of your day and look forward to see you guys tomorrow. Bye-bye.